There's an article from the Washington Post that doesn't paint as rosy a picture as we were just discussing.
Yeah. So
rental housing is suddenly headed towards a hard landing.
So the article points to, I think, what is actually a really interesting framework and context for understanding recent trends in the apartment market. It feels like we've looked back to 2008 a million times since the start of the pandemic, hoping like for a lesson from the Great Recession that can guide us through, whether it's the pandemic or now or whatever. We're always looking back there. And a lot of times they've actually provided a favorable understanding of our current moment from the perspective of like apartment investment.
Yeah.
Even in the lowest points of the pandemic, the housing market was never. Oh, yeah, I'm sorry. So some of these differences were that even at the lowest points of the pandemic, the housing market was never as hopeless as it was in the late 2000s. So it was always nice to look back to that time and be like, well, we don't have as bad. That's one reason why it was nice.
Yeah.
Another was that we were and are assured that like the financial tools and like the financial shenanigans that preceded the 2008 crisis are not as much of a factor today. Whether it's through like disinterest or like hard regulation, like they don't want to take on that risk. And then there's the story. This is what I want to get into a little bit more of the 2008 housing market crash and its protracted decade-long impact on what kind of housing they built during it, and a little bit about what they were doing beforehand. And so I'll kind of explain. Connerson points out a particularly relevant aspect of the Great Financial Crisis or housing crisis, whatever. Single-family homes took a huge hit, but apartments didn't take as big of a hit. Apartment performance definitely impacted, but it was outside of like 3 months in the middle of 2010, where it was just barely negative, year-over-year rent growth was consistently positive after the Great Financial Crisis. And I have actually like the little rent growth charts that you can pull up if you want.
Yeah, because I thought that there was at least like a year of negative rent growth.
So that is, that's rent of primary residence for the U.S. national average, and you can kind of see how it dips into the negative right around 2010.
Yeah.
And
but this is from CPI.
Yeah, that's a CPI, and we just talked about CPI.
Yeah, well, exactly. I think it's kind of like a year. Like
it smoothed it over.
It smoothed it over. I think we looked at some of those market rate. Numbers, there was like a full year of negative rent growth.
But if you're factoring in renewal, what makes CPI lag is that it factors in renewals as well, and we're going to talk about this later. But general overall, if you ask the average person, they would not have had a long period where they weren't paying a little bit more than they were last year in rent. So that's one story about the financial crisis. Home prices went down. Rents didn't crash like that.
Yeah, no, the issue wasn't necessarily rents or even demand for housing. It was a financial and liquidity crisis that obviously created economic uncertainty, and people had to raise the rents, and people were laid off, and so there was a lot of unemployment, and
so
it wasn't good. So
that's how you understand it.
That's how I understand it.
But Connerson's that's really funny. I was like, oh well, this is what he would say. Yeah. He said that leading up to the 2008 recession, the industry was focused on building single family homes a whole lot more than multifamily, and so homeowners who lost their homes, like they had an undersupply, and they couldn't live in there, and so they went into rent apartments. Because after the Great Financial Crisis, home builders were not building as many homes. So he says homeowners lost their homes, and after 2008 had to live somewhere. They rented apartments, and then the entry into the workforce of millions of young members of the millennial generation was better off for rental ownership demand at the time. So whereas home builders who were nationally focused became more conservative in the 2010s, multifamily developers who are more local and regional were intent on building as many apartments as they could to meet the demand from young millennials. So there's kind of two trends. That's what I was trying to note before: the underbuilding of apartments pre-Great Recession and the overbuilding after the Great Recession. And I looked at this. Essentially, what happened was single-family completions went from a low of 400,000 all the way up to a high of 950,000. So the low in 2011, the high 2018. Whereas multifamily completions went from a low of 103,000 to a high of 400,000. Essentially, what do we have? Like a little more than doubling of single family, a little more than tripling, maybe even quadrupling of multifamily completions.
But we didn't get up to 400,000 until like what, 2019 or so.
Yeah, both of these are around 2018, 2019 completion numbers is where the high points of both of them are. And I think we may have noted this before. I forget if we were talking during the show or not, but a rising tide lifts all boats. Housing is rental housing is connected to demand for single family home housing in a lot more closely than people suspect.
Well, it's kind of surprising because you would assume that one would cannibalize the other, and we really learned this, or it really was cemented as this is an actual real thing back in during COVID, during 2020, that when interest rates were so low and everyone was buying single family homes, you would think that, who would be renting right now because everyone's flocking to buy a house. But they were buying houses, but we also saw a rental demand spike as well. And now that the single family home market has cooled, you would think that people will still be renting apartments, and they are, but the rental market has cooled as well. So
they're a little more closely. I think that it almost seems like there's been wider swings in single family completions. In multifamily completions, I wouldn't read into its relative recovery, because if you look at single family completions before the great financial crisis, it is insanity. It's like 1.5 million every year, and that's like pre the housing crisis. In the 20-year span from 1995 to 2008, home builders constructed more than 1 million units every year at least.
And not too dissimilarly than today, that they were in relatively concentrated markets also.
Yeah.
They're in South Florida and Phoenix and places like that.
So just to run through Jay Parsons' response on LinkedIn, he did notice that rents perform better after downturns because they recover more quickly. It shouldn't be held against apartments. And shouldn't mean maybe that apartments would do poorly today. It just means that they're structurally better able to recover. It's a lower payment that you got to make than it is to just go ahead and buy a home, which is additional barriers are created. It's a slower market.
Yeah.
He also noted that the demographic situation, which Connerson said, and this is something that I think is maybe compelling about his article, is millennials were apartment buyers. Their peak apartment buying years were during the Great Recession.
Home buying years.
And now we're in home buying years for millennials.
Yeah.
And
peak
so
renting,
I'm wondering what that is. I think that, and you said this before the show, is this environment going to be changed? Are millennials going to, unlike other previous generations, be less interested or less able to buy a home? And that could really support continued apartment demand.
And I think it's one of those things it's probably going to be on the margins. It's not going to be like all millennials decided they don't want to live in a house or buy a house, but there's going to be some, but some aren't going to be able to afford to, just as a fact. They may be living in a market that's too expensive. They're not making enough money. The homes are too expensive. And then it's going to be a preference thing. Some people are going to like apartments. I also think this is where build to rent comes into play, and it really kind of provides that balance. Because typically, you want to buy a house not because you want to, you want to own a home. Some people do. It's like, I just want to own my own home. But a lot of it's, they want the space because they're starting families and they're settling down and they want the room. Yeah. So they've got a dog or whatever it is. It's more of those factors rather than I just want to own something. Yeah,
that's a good point. And Jay Parsons made a similar point that we were talking about before, is like, really, demographic issues aside, rental price growth is correlated with single family home price growth. You really need to look at housing demand collectively because they all tend to move in the same place. There's never been, and it's true too. We were expecting, all of these people turned off by home buying. They're going to flood in the apartment. Single family homes are too expensive. Now they're going to go into rentals, and rental demand is going to be huge. Yeah. That didn't happen.
It's almost like maybe a good analogy is like car buying. It's like, because buying versus leasing a car. It's like, it doesn't matter. At the end of the day, really it's like point. Demand for cars, demand for a place to live, demand for a house, demand for a house, demand for vehicle. Whether you're leasing or you're buying, you're renting, or you're getting a mortgage, you need the car. How you're financing it essentially is what we're talking about. Yeah, that's like kind of in the details.
Yeah, and then carpooling or not.
Exactly. I'm not buying a car. I'm carpooling. I'm moving in with folks.